I know. You've never heard of Rambus, and you don't believe what I said, but I'm willing to prove it to you. I'm willing to do the digging, find the numbers, and show you who are the most efficient companies that I'm interested in that are involved in AI and semiconductors and data centers. Who are the most efficient companies at bringing money to the bottom line? Isn't that why companies go into business? Isn't that why we invest in the company? So isn't it important that we understand who's best at it? Who's best at bringing the money to the bottom line? Let's go to the computer. I'll prove it to you. Okay, this is how I dig deeper to analyze stocks and decide which ones I want to put my money in based on their ability to do what they set out to do, and that is to make money. So the way a company works, and let's use Adobe. These are all the companies I invest in, and I've got them alphabetically listed here. And what I'm trying to decide is how good are they at what they do. So Adobe makes a product, and I use the product. I use it to edit my videos, to edit photographs, and they make this software that allows me to do it. And so from their revenues, they subtract the cost of making that software, and that is their gross margin. Then they have to market it to me. They got to pay their rent. They got to pay their electric bills. And that then they subtract that from their gross income, and they come up with their net income, the net operating income. And so what that is, this number 24 represents the amount of the revenue that they generate that comes to the bottom line and is their operating income. So I do that analysis on every one of the stocks that I own and come up with how efficient are they at what they're doing. So then I come over here and I sort them based on what percentage of their gross margin turns into operating a margin. So in other words, how efficient are they? Not how much money do they make, but how efficient are they at bringing the money to the bottom line? And I suspect the one on the top kind of surprises you. This is Rambus. What do they do? They're considered a microchip company. They design microchips and then have them made under their label. Okay, they don't manufacture; they design. So their gross margins are 78%. That means that they sell X dollars. And after they take out the cost of making the chips they design, they don't manufacture them. After they take that off, the 78% of their revenues are represented in gross margins. Net margins is after they take out their sales expense, their electric bill, their rent, they have 72% of their revenues available. That means they have a 92% efficiency of taking gross margins and turning them into net operating margins or net income. Now, Tesla, as you can see, is in the second place. And again, let's think this through. Most of their expense is up front. They make a product, an automobile. Well, they have to buy the parts, they have to assemble them, and they have to make that. So most of their expense is on the top end. So their gross margins are 18%, and then their net margins are 14%, and that gives them a 77 or 78% efficiency. Now, this one kind of surprised me. Taiwan Semiconductor. They make the chips or the wafers that Rambus sends them, and ON Semiconductor and NVIDIA send them. So they have like Tesla, have an upfront expense, but much to my surprise, unlike Tesla that has a gross margin of 18, they have a 54, and they're very efficient at bringing those profits or those revenues to the bottom line. Then we have NVIDIA. Again, they are similar to Rambus, but they are not near as efficient as Rambus. Then we have another semiconductor company, and that's ON Semiconductor, Apple. Now here we have Supermacro. Again, this is going to be very similar to Tesla. All their expense is up front. They get the parts from NVIDIA and Micron, and they put them in a box, and then they sell them. So their costs are up front, but they bring 9% to the bottom line. Not as good as Tesla, and not near as good as Rambus and NVIDIA. And here's Apple. Here's another one that surprised me a bit, ASML. Again, they're a manufacturing company, much like Tesla and Taiwan Semiconductor. But they're very efficient at bringing the profits to the bottom line. Microsoft, again, very efficient. Then what I have done is, in essence, what I said, everything that is green is 50% or better efficiency at bringing profits to the bottom line. Then I show the others in brown down to above 30%, and then you have those that are not near as efficient. Here's a surprise. Here is Amazon, 48% in gross margins, but the cost of delivering their product, and again, I would say this has to do with the cost of the distribution centers and the truck that shows up at my door. They aren't real efficient at bringing the money to the bottom line. Okay, so they're down here, and then here we have some companies that are. This is Advanced Micro Devices, ARM. These are some of the companies that are maybe in their growth stage. And then down here we have what I call my moonshots, who are developing and therefore aren't making bringing the kind of profits yet to the bottom line. But what I wanted to do was figure out who are the most efficient at what they do. So then I come over here and I even sort it out even further. Now what I'm showing you here is the efficiency of the net operating margin. In other words, who is best at bringing money directly to the bottom line? And again, something of a surprise, that is Rambus, that is NVIDIA. There you have Taiwan Semiconductor, Microsoft, Meta. I don't currently own Broadcom, but this is changing my opinion about Broadcom because, again, they are showing an efficiency from turning revenues into income. This is Apollo, and this is on semiconductor. So this is how I analyze stocks to help me make better investment decisions. So that's the good news. But let's dig a little deeper and let's see if the numbers are always accurate. And if we, just by taking a look at the numbers, if we can interpret them in such a way that we can make a good investment decision. And I think that's where the fallacy happens with a lot of people. Because if you'll look a little deeper, you'll find that in 2023, Rambus sold its PHY business to Cadence Design for $90.8 million. And as a result of this generated a tax savings of $146.7 million, which negates what appears to be a company that's doing better than NVIDIA. You see, it's not always what it appears to be. So and this is where I think most people fall into a trap in investing. They don't dig into the numbers. They don't go to the balance sheet of Rambus on their website and figure out, why did they make so much money and why did they bring so much profit to the bottom line? This is where the mistakes are made. This is why you need to be a part of a community that works together to make better investment decisions. Let's talk about this more in the future.